Bloomberg News.
All eyes were on the historic inauguration of the 44th President of the United States on Tuesday. In his inaugural speech, President Barack Obama said the challenges we face are real, they are serious, and they are many. And Wall Street certainly agreed Tuesday. U.S. stocks posting their worst Inauguration Day drop in Dow history. Take a look at the numbers. The Dow Jones Industrial Average falling 332 points. That's a 4% drop. Meantime, the S&P 500 losing more than 5%, or 45 points. Now, the number one comment we heard on the floor time and time again was, it's great to have a new president, but that hasn't changed anything about this market. And the bottom line, once again, access to credit. One trader even said, it feels like we're back in the credit crunch days in November. And just take a look, it was nothing less than a bloodbath for financial stocks. They led our declines on the day. S&P 500 Financial Index down a whopping 17%. It broke through the November lows, and now S&P 500 Financial stand at their lowest since 1995. And there was plenty of stock-specific news to get the bears growling. State Street off a cliff, losing more than half of its market value after the money manager reported a 71% drop in profit. Analysts also speculated the company will need to raise capital to offset bond losses. PNC down a whopping 41%. Investors are concerned about unrealized losses in that bank's investment portfolio as well. Now, Wells Fargo and Bank of America went along for the ride. Remember, not long ago, these were considered the healthier banks. You can see they're falling more than 20% each. Analysts saying those banks will need to shore up capital. And the list of double-digit losses continues on and on. Regions Financial, Fifth Third Bancorp, J.P. Morgan, all of these financial stocks tumbling more than 20%. The continued declines for financials certainly not instilling some confidence. One technical analyst telling me today it's hard to get a bull market rally going without a functioning banking system. Those worries were reflected in the cost to protect against a drop in stocks. I'm talking about the fear gauge or the volatility index. It tracks that cost, and it jumped 23% today, or 11 points, closing out with a reading, an extreme reading, I should note, of 56. Now, as concerns continue to grow, it's clear that this new president will have his work cut out for him, and Wall Street asking himself whether the role of government in these private institutions is going to change even more. And that's a wrap of trading here at the New York Stock Exchange. I'm Chris Valerio, Bloomberg News.
Hear more Bloomberg News reports on the Bloomberg Terminal at AV Go, on Bloomberg Television, and on Bloomberg Radio. Copyright Bloomberg LP 2000.